Yelp is looking to raise $93 million in its public offering, but is it going to be successful? A lot of these internet companies have done very well at the beginning of their offering life, but then start to fall off when the public loses favor with them. Francis, are we going to see this similar pattern with Yelp?
I would think so. Yelp in November wanted to come public, it's according to the talk, at $1 billion to $2 billion market cap. Well, it's coming at a $780 million market cap. So maybe there's a little bit of latent demand there. They have 66 million active users. So some of those people are going to buy just based on enthusiasm. But when you look at the pricing, it's priced at it's in the range of Groupon and Angie's List in terms of price to sales. They're all losing about the same amount of money if you compare that to the market capitalization. It's coming at a little bit of a price to book a discount to those other two. But I think the problem is that the rate of increase of their unique visitors in December declined to 8%. That was down from an 18% sequential quarterly comparison between September and June. And their rate of top-line revenue growth has declined in the last couple of quarters. So those perhaps are leading edge metrics. A couple of things I don't like about it is they have a dual class of stock, which is fine, but the way they've set it up is that the insiders will hold 98.7% of the voting power after the IPO, and that's kind of thumbing their nose at the public that they want to be public, but they also want to be private. And they also in their December quarter they did a $6 million stock transfer to a Yelp fund to help small businesses in their areas. But that was 25% of December's revenues, and they didn't have any real explanation in their S1 filing about what that $6 million contribution was. It's not very transparent. So those are a couple of issues that I think going forward might raise some questions. And when you do a filing, and nowadays you do not want to raise any questions for the investors.
I know the thing that really stuck out to me in this S1 filing for Yelp is that over 50% of their traffic comes from Google, and Google is starting to put more of the traffic onto Google Places and starting to drive it away from Yelp. So Yelp is really going to be at the mercy of Google.
And that may be why, partly why Yelp's loss widened in the December quarter.